Alright, what's up everybody? Welcome back to Royal Blu FX. In today's video, we're going to talk about premium and discount zones or premium and discount areas. We're also going to talk about what they are and how to use them and the benefits of using premium and supply zones, and also talk about why they're so important to use. We're also going to talk about the 50% equilibrium as well and what it is and how to use it, all in this video. So stay tuned. Also, if you're a new member to this channel, welcome. Go ahead and please subscribe to this channel because we always leave out free content for everybody. And then obviously it'll help us to create more videos just like this. For all the previous subscribers, I just want to say thank you very much for subscribing to this channel and for supporting us as well. Also, if you're looking for a good mentor out there or a good academy to join, go ahead and visit RoyalBluFX.com to come and join us right now and sign up, because we have a special going on right now that if you sign up, you're going to get a free one-on-one lifetime coaching. So let's begin.
Gentlemen, the King!
Alright, so what are premium and discount zones? Well, before I begin with this question, I'm going to give you guys an example of what premium and discount is, okay? So let's just say, for example, we go to a grocery store, and in that grocery store we find a produce section. The produce section, we look at, let's say, an apple, okay? We look at the apple and we see that this apple costs $3, alright? All the apples cost $3 per apple, okay? And to us, we think, oh my goodness, this is too expensive. It's so expensive. $3 for an apple? I wouldn't want to buy this, right? Okay, so we go back in the next day, right? And we go back to that same produce section, we look at that apple, and now the apple's at 50 cents, right? It's at 50 cents per apple. So now this is at a very low cost, all right? So same thing goes for in the trading world, okay? Whenever we're looking at prices, we're looking at areas where prices are at a discounted area and where prices are at a most expensive area, okay? Think of that apple, for example. That apple, if it was 50 cents, we would have started buying it. We've probably bought a lot of those apples, right? Because they're at a discount area, okay? We would have never bought that apple at $3 because it's way too expensive. And that means we will have less cash in our pocket, right? So when we use this example here for the markets, it's just the same thing, all right? It's just the exact same thing. What we want to use the premium and discount levels for is to specify where cheap prices and where expensive prices. All right, so what do premium and discount zones look like in the forex market? Well, I'm going to show you right over here, okay? So right here, there's a tool that's called the fib retracements, okay? And probably a lot of you guys have used this. So when I click over here and expand them out like this, you can see this is what the premium and discount zones look like on the forex market. Now, mine's an edited version, so if you want to go ahead, you can copy my settings if you'd like. They're from 0 to 1 to 0.5, all right? And so this is what I look for: cheap and expensive price, all right? So the fibs pretty much tell us where the cheap and most expensive price is in the market, okay? So let me show you an example, all right? So let's just say, for example, when prices are pushing bullish like this, okay? Something like this, all right? We want to measure from each high to each low where the most cheapest and most expensive price is, okay? So generally speaking, right over here, all right, you can see that anything below here would be considered our discounted zone or discounted price. Anything above here would be considered our premium price, okay, which means it's most expensive. So let's just say in this case, when prices are going bullish like this, you can see that prices have been bullish. Now we're waiting for a price to retrace, but price hasn't actually quite gone below the discounted zone, right? It has stayed in the premium, which means the prices are still expensive, and this is where we want to buy. Because why would you want to buy anything so expensive, right? All we're wanting to do is buy when prices are low, right? So if prices were in the discounted zone, right, anywhere below the 50% right over here, okay, then this tells us and it signifies that this is cheap price, or it's relatively cheap to what it was before, right? Let's just say it was here, right? The markets were here. Markets were here at one time as well, right? And before they get down to this area, down to the discount zone, then this is most likely where we're mostly interested in buying the price, right? Or buying the market. All right, so what do premium zones look like, okay? So let's just say when prices are going bearish, something like this, all right? Prices going bearish like that, all right? The premium is the higher top of the Fibonacci's, okay? This is where we're looking to sell the price at most expensive, right? Because now we want to get our bang for our buck, right? When we're looking to sell something, we're not looking to sell our stuff at a very cheap price. Why? Because we're going to get little to no money here at this area, at the discounted zone, right? So when we're looking to sell, we're always looking to sell at the premium price, because we want to get a bang for our buck. We want to get the highest top dollar, right, and the highest top worth for our product that we're selling, right? I mean, we're not selling anything, obviously. We're just selling our money, the currencies that we're trading, obviously. But we want to sell this currency at the very highest price that anyone would want to buy it for, right? So technically speaking and theoretically speaking, this is where you want to sell. You want to sell at the premium. So let me just write down this for you guys so you guys can see this clearly right over here, okay? Let's go over here. We'll type in premium, okay? Premium. So this is our premium, and this would be our discounted zone right over here, discount, okay? So just remember this, okay? The fibs always stay like this, all right? This is always our discount. This is always our premium. When prices are going bearish, all right, we're always going to refer to the premium zone, okay? This is where we want to be selling, all right? If prices come near or at the 50% right over here, are we interested to sell? No. We want to wait for prices to get to our premium, because this is the better price, okay? This is the best price that we want to sell our currency at, right? That we're feeling that someone's going to buy this currency from us, right? Now, obviously, again, when we're going bullish, we don't want to be buying at premium, because why, right? We don't want anybody to be buying at a premium, right? You don't want you to be buying at premium. You want to be buying at a discount, because now this gives us a better chance and a better opportunity to be in the market at a cheap price, right? So, and the reason why you want to do this is because if you buy at a premium, right? The reason why you don't want to buy at a premium is because if prices should ever go against you like this, right? Now you regret buying at a discount, right? And now you're forced, right, to close your trade that you've taken a buy here at the premium. And then now when prices start going bullish, you regret to say, oh my goodness, what happened here? I bought at this area here, right? I got a perfect sort of market structure, alignment. Why didn't price come and, respect this demand zone here, right? And instead went right through. Right? Well, that's because you weren't smart enough to look for it to buy in the discounted zone. Okay? Same thing goes for when you're selling the markets. Okay? When you're selling the markets, you want to be making sure you're selling price at a good price. You don't want to be selling price at a discounted zone like this. Right? Just because when prices now start to reverse or retrace, and you sold right here, this is where now you start to regret. This is where you have to, you're obligated to close your trade. Right? Now you're going to have to wait for price to get up here, right? And then you're waiting for prices to go bearish. Now when prices go bearish like this, oh my goodness, now you've thought to yourself, I now regret not holding this trade, right? Well, this is why we always try to make our smart decisions on buying and selling in those correct zones, okay? This is why it's so important to buy and sell in these correct zones, because what you're trying to do as a trader is to buy and sell at good prices, not at the bad prices, right? And so now what I'm going to talk about is why is it so important to trade at these areas, okay? Now the reason why it's so important to trade in these areas is because when you're thinking about buying or selling anything, let's just say in this case you're wanting to buy, right? So when price is going bullish, you want to be buying at a very good price. Now, the reason why you want to be buying at a very good price is because anytime you're buying at a discounted zone, right, in the discount zone or a discounted price, is when you're going to get the best quality of a trade, okay? A lot of the times when you're trying to buy in premium, right, you're not going to get the best performing trade. You're going to get the weakest or the worst, performing trade. Something like this, maybe where it's very rangy. There's a lot of people that are buying in premium, not understanding how to buy and when to buy, right? And then when prices come to a discount, then prices start to go bullish like this, right? You've probably been in a scenario like this, all right? So this is why it's really important to buy in the discount zone, is because you're going to get the best quality performing trade, okay? We want the best performance, right? The high probability trade, the one that's going to actually perform and outperform anything in the premium, right? So same thing goes for the sell, right? When prices are at a bearish market like this, right? We obviously want to be selling in the premium in here, right? We don't want to be selling at or near the discount because that would be a bad performing trade, okay? If you're selling from a discount like this, guess what? You're selling at a very early stage, right? We want to be selling at the premium because now we're going to get the best performing trade, okay? There's a lot that goes on in here, obviously. Say, for example, like inducement, right? Or there's potentially liquidity that's forming in the market, something like this where prices are going bearish, you know, if you understand structure and how structure is fractal, kind of like this, right? Then you see some liquidity, price goes up and takes the liquidity, right? Takes all the form of liquidity, all the trend line liquidity, whatever, right? And then comes to mitigate an order block like this and then starts to push bearish, right? These are the best performing trades that could ever happen in the markets, okay? So always think about that. Whenever you want a good quality performing trade, where do you trade, right? Where do you buy, right? So I'm going to repeat this one more time. Whenever you're selling, always sell at a premium because that's the best performing trades, okay? This is why you want to be selling at the premium. All right. Same thing goes for the buys, right? When we're in a buying market, we want to be buying at a discount because this will always be the best performing trade in the markets. Okay. We want to get the best quality of a trade in the markets. All right. So there's another element that I want to add to this. Okay. I want to add to the premium discount zones. Okay. So if you look over here to the left, this is what's called the 50% equilibrium. Now you might be asking, what is the 50% equilibrium? Well, it essentially is the 50% between the discount and the premium zones. Okay. And the reason why the 50% equilibrium is so important is because a lot of traders, 99 probably percent of the traders, a lot of the traders trade, buy and sell at the premium zone, okay, or at the premium level. So when prices are bearish like this, there's going to be a lot of times when prices are switching like this, right? It's probably consolidating, you know, moving something like this, right? And then pushing bearish like this or something like that, right? What's happening in the 50% is essentially there are buyers and sellers that are trying to buy and sell from these levels, okay? A lot of the traders that trade like this have been taught, at least the retail traders, right, have been taught to buy and sell from these zones, right? Now, ones will fail and ones will win, right? Depending on whatever they're looking at and depending on how the market is, you know, depending on their subjective ways of seeing the markets, right? But in our case, as the SMC trader, right, we're not buying anything from the 50%, right? We can only watch and see what happens based on the 50% based off of what the market is giving us. What is it presenting us, right? So we can buy and sell from the 50% only when we get a good setup or a setup that is presented well for us in this case whenever we see liquidity, okay? So what do I mean by this? Well, essentially when the retail traders are buying and selling off of the 50% equilibrium, there is sometimes a range that happens within that 50% equilibrium area, okay? And that range is creating consolidation, right, in the form of liquidity. Say there's buy side liquidity and there's sell side liquidity right over here, okay? So what this means is when prices are doing this, there's a huge evidence that prices will eventually come and return back up into the premium like this, take out the liquidity, right, and then sell the market, right? The markets will go bearish, okay? This is obviously another topic for another video, but this is just obviously an example to show you how the 50% is being worked, right? When there are a bunch of sellers and buyers switching their orders here, right? Now, in order for any of this to work correctly, right? In order for any of this 50% equilibrium to work correctly, you need both equal buyers and sellers, right? You need a seller for a buyer. You need a buyer for a seller. So this is where that decisive area is. There's a decision that's being made by both buyers and sellers to decide where the market's going to take off, right? We know as the SMC traders well enough to not be involved in this area often too well, only because we're waiting and we're scoping things at a far distance. We're trying to see what they're doing, right? So that way they can make the decision, or relatively the dumb decision, for the banks to go and take them out, right? To take out that liquidity, which is your sell side and your buy side liquidity, right? And once they do so, then we can speculate and see as the SMC trader, where the market's going to have to go potentially, right? If prices are going bearish like this, we know where to sell, right? You can see from this high to this low, we have this huge push to the downside, and now you can easily calculate where the market should go bearish, right? Where they should go potentially, right? And where you should be selling potentially, right? And we know when prices go against liquidity, right, against it or towards it, is when the banks are deciding where the money is to go, right? Where the money is for the banks to go to. They came below here, took out the sell side. They're going up here now, taking the buy side. And now the banks are deciding to push prices bearish only because we're in the premium area, in the premium zone. All right. And this makes a lot of sense because there's been some unmitigated order blocks. Excuse me, that was a bad line right there. Something like that, right? There's an unmitigated order block somewhere in there where prices needed to mitigate to close before prices continue bearish. Okay. So this is what. This is how the 50% equilibrium is decided right now. Again, I'm not saying we can't buy or sell as traders either, right? There can be many types of scenarios, whatever happens in the 50%. But what I'm saying is, don't be the first trader that goes in on the 50%. Don't be the first one, because many times a lot of the first traders that trade in there often get taken out, right? And often have gotten their stop losses taken out, right? And anyone that's in on the first trade is probably either selling or buying at the premium, at the 50% equilibrium. So now what I want to do is go ahead on a live chart to go ahead and show you how to buy and how to sell correctly on a live chart. All right, so here we are on a live chart. What I'm going to show you guys right now is how to use the fibs correctly and how to identify sort of the trend and how to use the fibs correctly with the trend, all right? So right now you can see that we're on the 4 hour right now, and what I'm going to do is I'm going to look for a low and a high just to give you guys an example, okay? So here's a low and here's a high right over here. Now, if you guys can't see that clearly, I'm going to zoom in a little bit right over here just so you can see it. There's our low, there's our high. We just had a break of structure right over here, okay? And then as you can see right over here, notice in the discount zone is where the markets have pushed bullish, right? You can see that in the premium area, in the premium zone, you can have seen that there's a low right over here, and then there's a high, and you can see a lot of buyers have been trying to buy the market at this area, right? Notice how they failed, right? Because they didn't have the knowledge or maybe the intention of knowing where that discounted zone is, right? We want to buy a price at a very cheap price. You can see that the price was bought here at 1.3, right? And then the real price was actually bought here at, say, 1.29, all right, or 1.2. Okay, almost 1.3. And so what we're interested in is buying everything at a very low price, right? So notice how, again, prices were bought here. Now, I also want you to see when prices are being decided on where people are buying, notice how people are buying and selling at the 50% equilibrium also, right? So there's people that are buying and selling at the 50%, either selling they're obviously selling off their currency, right? And then there's others that are saying, okay, well, I'll take a buy, and after you sold it, I'll take your sell for the buy, right? There's more sellers here involved trying to sell it off, right? There's more buyers that got involved in here that took more of the sellers' currency, right? And then now trying to push price back up, right? So you can see now there's more buyers that are involved in this area. This is where that 50% equilibrium does come into importance, because this is where the market are switching, right? Where where the orders are switching. Okay, and there you go, right? When you take a buy, you would hit this high here and call it a TP right over here, right? So that's how this is done, right? Let's go ahead into another one. Okay, let's go right here. All right, so there is this low over here to this low to this high. And you can see over here clearly again, right? Prices have come well below in the discounted area, right? In the discounted zone. You can see once again, buyers have bought here, right? In the premium. It makes no sense that you should buy in here, because you're buying prices too very expensive, right? You want to buy price at a cheap price. This is where anything will perform correctly and well. You're going to get the best performing trades, right? Notice how prices exploded through here. Notice again how prices exploded through here as well, right? What I also want you guys to see is how obviously liquidity is used in the discounted zone. All right, you can see that we had a lot of liquidity there, right? If you expand this a bit further like that, the trend, right? You can see that there's buyers here, here, and here, right? And then the market came out and took out that liquidity, then went way below the discounted zone, right? And now it mitigated an order block right in here, and then it pushed prices bullish, right? What a coincidence, right? Let's go and do this again. All right, let's go to the next one. We're going to go from the low to the high. Actually, what I'm going to do is not from this low, but from this low. Okay, and the reason why we're not going from this low, even though this is the origin right over here, let me just mark it out. This is the origin of the low, right? But what's happening in here is that prices have expanded, right? Broken structure. They have come and retraced, right? Maybe not fully, but then there's another explosion that's coming through, right? This is internal structure, okay? This is what we like to call internal structure. This would be considered our minor structure pushing above the substructure, okay? And so right in here, you can see where that sweet spot is. Again, the discounted zone is the market has presented itself well below the discount zone. Now you can see here, there have been traders that have bought right in the same low here, right? This is why you don't want to be the first in. You always want to be, after seeing whatever's happening, right? You want to be the person that's coming after, a little later. Because what we're doing is we're scoping price first, seeing where it's going, and then we're going to act and react to the market. So once we have all those traders that have bought there, obviously this is considered to be liquidity. Price comes and takes out that liquidity. It mitigates this order block right in here, right there, right in our discounted zone. And again, what do you see? Prices pushing bullish, and this is where the best performing trades happen, right? Always have these are rules, obviously, but always have rules and obey and abide by the rules, right? Let's push this up again from here to here. Okay, we're only going to look at this low to this high, not this data over here. We're only interested in this right here. Again, notice from this low to this high, right there, okay? When prices have broken above a new high here, you can see that prices were well below the discounted zone, okay? And this is where the best performing trades happen. And once again, all right, there was liquidity right below the liquidity. There's an order block. We're in a discounted zone. This is giving us a great chance for us to buy. We want that best performing trade to go bullish, right? And then the story, guys, that's how it all works, okay? Now, if we can look at the supply zone, right, or the sell side of the things like this, okay? Let's look over here. Let's go from anywhere from this high to this low, right over here, okay? You can see all the order flow. The order flow is beautiful over here. You can see how there's a high there, right, a low. Look where price goes, right inside the premium. Now this is still premium, okay? Never get it confused, because there's discount and premium, right? Where discount's always at the bottom, premium is always at the top. So even when we're going on the sells, on the bearish side of things, this is always the premium. You can see here there's a lot of liquidity, trendline liquidity. You can see that there's inducement in the market. You can see that there's other sellers that try to sell here now and have failed, and prices went up right into our premium discount now. And it's mitigating an order block here and push prices bearish. Now these are the best performing trades again, right? This is what we want. All right, let's do it again from this high to this low. You can see over here nothing has performed well. You can see there's a lot of sellers that sold in the discounted zone, right? And then obviously if you put a trend line like this, or whatever you want to call it, notice what's happening here. This high here came well above this high here. That's because prices have come and taken out all this liquidity to mitigate this order block right there to push bearish, right? This is why we can't be the first in, guys. We have to be last, okay, or at least somewhere in the last area, right? If I even expand this from not from there. Let's go from here, from this high now to this low. Because, and the reason why I'm going from this high to this low is because all this here was manipulative selling happening, right? Early sellers these sellers saw these sellers sell quickly, then these sellers saw these sellers sell quickly, so they sold, right? So you can see a lot of liquidity above, and there's that area where the market comes above, takes out all the liquidity, mitigates this high, and sold off very well. So we would have been involved in the trade like this. And this is where the best performing trades are, okay? So again, we go from the high to the low here, and you can see where we at in the premium zone. Prices sell off well and aggressive to the bearish side. One last thing I want you guys to see again is between the 50%, you can see that there are people that are selling and buying well below in the discounted zone, and there was other sellers who try to sell at the premium, at the 50% equilibrium, didn't perform well, price pushed above, took all this liquidity, took out this inducement, right, and mitigated an order block from here and pushed bearish. Okay, it's very simple to use these tools, guys. This tool, because it does give you a better side of things to understand how price is calculated, right? And you will always take an advantage of this, right? You would always win from this because you are selling and buying in the correct zones. Okay, guys. I hope you guys like this video. It was a little bit educational. Hopefully, a lot of it was educational, right? And if you did find it helpful, please throw those thumbs up in the video, and also subscribe to this channel because we always leave out free content. Until then, we'll see you in the next one.